Dear viewers, this is June 24. July 31st is the last day to file tax returns, both for the resident Indians as well as for the NRIs. When it comes to question of filing tax returns for the NRIs, there are several doubts that are there in the minds of NRIs. Should I file tax returns or not? What are the deductions which are available for NRIs? What is that I should be knowing of? Are there special circumstances which makes me file the tax return or skip the tax return? In this episode, we are going to discuss about 11 points which NRIs have to keep in mind while they file the tax return. Nevertheless, the message is very clear. You have to file the tax return within the due date in case if you are unable to file the tax return. This is NRI Money Clinic and I am Dr. Chandrakant Bhatt, your financial guide for a happy living.
NRI Money Clinic. No hype, just the right advice.
Dear viewers, to talk about the 11 points that you have to keep in mind while you file tax returns in India, I have invited for this episode my eminent faculty, Mr. Chaitanya Garg. Mr. Chaitanya Garg is an MBA in Finance from Institute of Management and Technology, Nagpur. He has over 2 decades of corporate world experience in some of the high growth sectors in India such as telecom, logistics, aviation, hospitality, and the travel-related service industry. His domain expertise spans project financing, project appraisal, business planning for startups and established enterprises, domestic transfer pricing, wealth management services. He has held senior leadership roles such as DGM Finance at Interglobe Enterprises and Head Financial Planning and Analysis at Moving Express until May 2022. He is currently the co-founder of FileMyReturn. Welcome to this episode, Mr. Chaitanya Garg.
Thank you so much, Mr. Bhatt. It's an honor to be here on your show. It's an absolute pleasure to be sharing this dais with you and responding to our NRI viewers.
Mr. Garg, the first question that is there for NRIs, the differentiator between resident Indians versus NRIs is the global income. When an NRI is filing tax return, he could be living in different countries. He could be having global income from various sources. How does the global income comes under the tax purview when he is filing the tax returns?
This is an excellent question to begin with, sir. Well, in India, the taxability of individuals' global income is significantly influenced by their residential status. The Income Tax Act 1961 outlines the criteria for determining whether an individual is a resident, a non-resident, or a resident but not ordinarily resident of India. If your status is resident, sir, then it's essential to note that your global income becomes taxable in India. This means that any income earned anywhere in the world is subject to taxation in India. But it's the reverse for NRIs who are citizens of India but working overseas. Only their income earned in India or accrued in India is taxable in India.
You mentioned that there are criteria to determine the residency status of an individual. Can you elaborate as to who is deemed to be a resident Indian or a non-resident Indian? How does the law differentiate between the two?
An individual will be deemed to be an Indian resident if he or she fulfills any of the 2 conditions given here in any of the previous year. Here, previous year means period starting from 1st April and ending 31st March. So the first condition which they shall be evaluated on, if they are residing in India for a tenure of 182 or more days during the previous year, or the condition 2, if they stay in India for 60 days or more during the previous year and 365 or more days during the 4 years immediately preceding the previous year. If any one of them is not meeting any of these 2 conditions, then they are deemed to be a non-resident.
While you said about the number of days condition, at times it gives rise to certain dilemmas. For example, there are merchant navy officers, people who work on the merchant navies. There are students who are working abroad. Are there any special clause with reference to these people who are working on merchant navy or being the students there? Even students many times have got a lot of income abroad.
Navy officers who work in international waters, the tenure of stay depends on the territory. For instance, like if the person spends more than 183 days in foreign territorial waters, then they are considered to be NRI. But if they reside for the major part of the financial year in Indian territorial waters, they are considered Indian citizens. Similarly, sir, for students of Indian origin studying in universities abroad or overseas, they acquire the status of NRI and have to abide by the legal regulations accordingly of the overseas country where they're studying.
we hear one more terminology with respect to resident, not ordinarily resident. Earlier, we used to hear this terminology as RNOR only when it is referring to a returning NRIs. But now with certain amendments which have happened in the last couple of years, the scope of RNOR definition has broadened. Can you elaborate a little bit more on RNOR and how does it impact filing of tax returns?
An individual is classified as a resident but not ordinarily resident, RNOR, for the year if they fulfill any of these following two conditions. First, having been an NRI for 9 out of 10 previous years during the year under consideration. Or second, staying in India for 729 days or less during the 7 years preceding the year under consideration. It is very pertinent to note that this amendment was brought in by the Finance Act 2020, which extended the RNOR provisions to Indian citizens, persons of Indian origins visiting India, but they are subject to certain conditions. The 3 conditions which they are subject to: first is that if they are attaining a total income excluding foreign income of rupees 15 lakh or more in India. Second, if they are staying for more than 120 days but less than 182 days in the previous year. Third, having a stay in India for 365 days or more in the 4 years preceding the previous year. Previously, these individuals were categorized as non-residents completely. However, with this amendment coming in, their residential status is classified as RNOR.
What is the need to bring this amendment? I am always a little bit, skeptical or get a dilemma in my mind. What was the need for the government to bring this amendment? Was there a loophole in the law which was being exploited by some government wanted to capture or, plug this loophole of taxable income? What was the need to bring this amendment?
Reason for bringing in this amendment was that any Indian citizen who is earning 15 lakhs from sources within India, but he is not liable to pay taxes in his jurisdiction where he stays. So, to tax that income in India, they had brought in this amendment. So, the categorization of deemed residents as resident but not ordinarily resident was effective from the financial year 2021. This change carries a lot of implications. First, the NRI in such case will lose the double taxation avoidance agreement benefit. Second, there will be a forfeiture of various exemptions on his part. And third, there will be an increased scope of total income taxability over overall basis.
Now coming to the actual implementation of filing the tax return. Can you tell, for the benefit of my audience, which all the streams of income in a particular year will be liable to be taxable in India for NRIs of all categories, whether he is an NRI, deemed resident Indian, RNOR? Can you give answer for this?
So let's start with a detailed explanation point by point. Well, the first income which comes to mind is the salary income. That is the salary received in India for services provided in India. Even if one is categorized as an NRI, his income from services rendered in India, regardless where he receives the payment of this salary, will be subject to taxation in India. That's the first part. Second, any income from a house property situated in India. So, like any resident Indian, NRIs are also liable to pay tax on the rental income which they are earning. Even whether they are leaving a property vacant, they can claim a 30% standard deduction that's available to them. They can offset property taxes, utilize interest deductions on home loans, but still the rental income would be taxable here in India. Then the third one which comes to the mind is the capital gains. The capital gain arising on the transfer of any asset, be it property, be it shares of securities or mutual funds. In that case, any capital gains which arises out of that, they will be liable to tax out here. But in case of capital loss, that also can be carried forward only if they file their income tax returns here in India. Then the last income which comes is the income from fixed deposit or income from any interest received on the savings account or NRO account. So these would be liable to tax here in India.
Now, while filing the tax return, the resident Indians have got certain benefits while filing the tax return. Say, for example, ATC, deductions for paying the home loan and kind of a thing. Now, in case of NRIs, what benefits are available for NRIs to claim while they file the tax returns?
They are pretty much similar to what is available to resident Indian. So if we were to look at specifically for NRIs, what are the exemptions which are available to them, then under Section 80C, they can claim deductions for the life insurance premium payment, the children's tuition fee for 2 children, but they should be studying in India, not abroad. Then any principal repayments on the home loan which they have taken in India, any ULIP contributions, the unit-linked insurance plans, or investment in ELSS. So these are all deductions can be claimed under Section 80C. If we were to talk about the other sections of Income Tax Act which are available to NRIs, then deductions from house property income, deductions from 80D under health insurance premiums, deductions under Section 80E for the interest paid on education loan, deductions for donations made under 80G, deductions under Section 80 DTAA, that is for the interest income earned on the savings account. That's similar to the resident Indian. Up to 10,000 rupees of interest is exempt for them.
Mr. Chaitanya, I've also heard while NRIs are eligible for certain deductions, what you mentioned, NRIs are also having certain differences in while filing the tax return. Are there anything specific benefits which are not available for NRIs?
There are many of deductions which are not allowed to NRIs specifically. So under Section 80C only, let's start with that. So any investment made in NSCs or post office 5-year deposit scheme or senior citizen savings schemes, these are absolutely disallowed for NRIs. Also, they can't open any new PPF account. They can maintain the existing PPF account for a period of 15 years, but they can't open it afresh. Once 15-year period is over, they need to close down that PPF account. Then under Section 80DD and 80DDB, the deduction available for maintenance of handicapped dependents is also not available to them. So deduction is not applicable for NRIs under this section. Any deduction under Section 80U, that is for a disability of NRI himself or herself, is also not available. Welcome to FileMyReturn. Let's begin with filing your ITR. Once you click on the link, you will land on our home page. Out here, choose from sign in or register. In case of existing user, click on sign in. Else, register. Feed in your name, email address, password, mobile number. Click I agree, sign in. Choose your residency status, whether you are resident Indian or non-resident Indian. Click on ITR filing. Choose a financial year. You can choose the current financial year or the 2 previous financial years. Now you will land on this page. Here you need to feed in your income tax login credentials, or you can skip, feed in your PAN number, then your password. Your details will be auto-filled in. You just need to simply verify each of them. Check and confirm, save and continue. Your address, save and continue. Identification and contact details, save and continue. Your banking details, save and continue. Select had a source of income in the previous year. Confirm your residency status. Feed in your resident country. Enter passport number. Feed in the period of stay. Click on save and next. Out here, you need to declare your income sources and upload the relevant document. Select from the drop-down menu. Choose the file you want to upload. Enter the password of the file. Enter any remark for the team. Press save and add more. A pop-up appears that document successfully uploaded. You can also view at the bottom of the screen. If you wish to add more documents, simply select from the drop-down menu, or else press next. On this page, click on the I acknowledge. Your best fit plan is visible out here. Click confirm and pay. Your ITR filing fee is reflected out here. In case you have any coupon code, put it out here. Press redeem. Press checkout. You will be redirected to the payment gateway. Choose the mode of payment. Click pay now. Once the payment is complete, you will receive a successful payment message and you will be redirected to the next page. Payment made successfully. Here you can view your invoice and also download the bill. So this is the process to file ITR for NRIs. For any queries, call on the given numbers below.
Now the crucial question. You have told about what income gets taxed in India, benefits that are available to NRIs, benefits which are not available to NRIs. The crucial question is, which NRI should file the tax return? What is the threshold levels? What is the guiding principle? If somebody is there today filing for the first time or has not filed tax return anytime in the past, how will you decide, should I file my tax return or I am not liable to file the tax return? As a practitioner, how do you answer this question?
Similar to any other individual taxpayer, an NRI must file the tax return in India if their gross total income received in India exceeds 2.5 lakh rupees for any given financial year. If we were to take an example of Mr. Rai, who was residing and working in USA, when he logs on to this income tax portal, he finds out that there is a tedious deduction of rupees 15,000 made at the rate of 10% for the interest earned in his NRO account. Now, Mr. I does not have any other income in India except for this interest income. So the taxation rules in India is very clear about this part, that if we were to determine his taxability in India, we would have to go by his residency status. So we'll first need to evaluate what was Mr. I's residency status in India. First, let's see how much time did he spend in India. So Mr. Rai had left India on 23rd August 2023 and had returned back only on 15th February 2024. So during this financial year, his stay in India was less than 182 days. That makes him an NRI. So being an NRI, he is not supposed to file an income tax return because his taxable income is less than 2.5 lakh rupees. But the catch here is, sir, that his TDS amount got deducted of 15,000 rupees. To claim a refund, he'll definitely need to file an income tax return. Without filing a return, he'll not be able to claim this refund of 15,000 rupees.
One last question for you, Mr. Chaitanya. NRIs who live in multiple countries, they are at times the beneficiaries of double tax avoidance agreements between those two countries. If someone has to make a claim against the double tax avoidance agreement, what are the things that they have to keep in their mind and what care that they have to take while filing the tax return?
So the specter of dual taxation is very daunting for NRIs, definitely. But these provisions are there in place, these agreements are there in place to help our fellow NRIs staying abroad. So Government of India has entered into this dual taxation avoidance agreements with numerous countries worldwide, whereby these bilateral agreements define as to the country which can tax the income. So basically, wherever the income is getting derived, the country of origin of that income is the one who are liable to tax the income. There can be certain exemptions, definitely. Like said in the very beginning, if an NRI's resident status is resident Indian, then his global income also becomes taxable in India. But that is where the tax credits come into play. So whatever taxes that NRI has paid in that foreign country, he can claim a benefit of that in India while filing his income tax returns. And vice versa. Whatever taxes he is paid in India for any income generated in India, he can claim a tax credit benefit while filing return overseas.
Mr. Chaitanya Garg, thank you very much for these inputs. They gave a lot of insights for those aspiring NRIs when they have to file tax return this tax filing season. Thank you very much for your kindness to come on the show and explain this for the benefit of my audience. Thank you very much, sir.
The pleasure is all mine, Mr. Bhatt. Thank you so much for having me on this show. Thank you.
Dear viewers, if you want to file tax returns in India, you can make best use of services provided by NRI Money Clinic as well. We have tied up with FileMyReturn. We have provided a link to FileMyReturns in the description box below. If you have to file the tax return, all that you have to do is click on the link. It will guide you in a step-by-step manner to file your returns. Make best use of this and file your returns on time. Dear viewers, thank you very much for watching this episode on NRI Money Clinic. Hope the episode that we have done helped you to understand how you can file tax return, points that you have to keep in mind. Do not forget to subscribe to this channel. Do not forget to share these videos with your friends and relatives, near and dear ones, and on all the WhatsApp groups on which you are connected with. Thank you very much again for watching this episode. I'll be back with you next Tuesday with yet another expert on yet another subject. Till then, stay safe. Jai Hind.
Press the bell icon for more details and subscribe our channel.